Hey friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis, where we look at the technical charts and try to understand what happened in the market for the day, and then also plan for a minute trade for the upcoming trading day. That's May 3rd, Friday, tomorrow, 2024. So we had a flattish close on both the indices today, and we had an bull trap reversal that happened on the previous trading day, and yesterday was a holiday, and that's how the market has taken the Fed rate decision outcome in the Indian markets. Let's try to understand more and see what we can make out of it. We'll come to this wrap up, but let's look at the technical charts first on the daily. And what you see here is the Nifty candlestick. Looks like this. What has happened is it's a bullish candle, right? It met with resistance, right? A previous resistance was exactly at 22,700. It met with resistance and then couldn't move further up, but it has closed above the previous candle's high. Previous candle's close, basically. And Banknifty, it's even more worse. In the sense, it's worse as compared to the Nifty, which is currently close flat positive. Banknifty is close flat negative. That's an 0.5%, about 0.34, and it's in this candle once again. And remember, there is a 3 candle shooting star kind of pattern, bearish pattern. Could turn out to be dangerous if the price moves below today's candle low. Same with Banknifty also. It's small body green candle. If the price moves below yesterday's candle's low, then they may have trouble. Banknifty has more trouble. Looking at this now, let's try to figure out what is the Bollinger Band saying. It's beginning of an expansion, you can say. Just the beginning from a consolidation, just beginning. So that way, still has a bullish bias, indicating probability for the expansion to further go up. And Nifty, its expansion is more evident. It is fully expanded. It has fallen down from that walking in the bands thing, right? But a little bullish bias and its expansion on the upside still continuing after 2 days of bearish candle. Still the expansion is seen. That indicates, right, bullish bias indicating more support. Now let's look at the support resistance levels. Of course, there are 2 channels here, trendline channels. One is this inside one and not the outside one. The top of the inside one is very close to 23,000, so no space to go there. First resistance will be our time high, that is hit at 22,783.35. So that's yesterday's high. That's first resistance. 22,783. 22,800 would be the first resistance, and then 22,900, and then 23,000. That may be it for tomorrow max. And if it further breaks out from there, it can go to the channel top towards 23,500 max, or the yellow channel stop will come. Suppose on the downside between 22,425. That's where 20 expansion moving average support is there. And then 22,200 is there. 214 where the 50 expansion moving average is there. Very close by 22,180. You have the gap support also. So confluence of 2 supports. And then you have the 23 Fibonacci extension supports at 21,883, 21,900, and 100 expansion moving average, and the previous single is coming at 21,754 and 21,700, and 20,000 before that is also a big rounding number with good supports. So that's Banknifty. That's Nifty. And Banknifty, the first resistance will of course be 49,974 and 50,000, big rounded number on the previous all time high. So after that, it can go as high as 50,500, which is the channel top. On the second outside trend line channel top. The inside trend line channel top is already hit, and that's where it is. Move back. So the first support will be 45,700 nearby. It's a neckline of the cup pattern. The cup pattern breakout has happened on Banknifty. So the neckline of that will be a support. So 49,231. So usually 49,000 would be a support because it's a big rounding number. Then 48,670 neckline of cup pattern support would come in. Then 20 exponential moving average support will come in at 48 and 42. 48,237 and 50 exponential moving average before that. So 48,000 big rounding number support comes in close by, and then 47,575 would be the 50 exponential moving average support, and 47,000 big rounding number would be the next support, and you have the 100 exponential moving average of 46,970 that's coming very close to that, in confluence with it. 47,000 also has got the 38 Fibonacci retracement level, so that's a very good support. 47,000 if it ever is a normal that happens. It's a Banknifty. Let's quickly wrap it up. So today's was a positive close on Nifty and negative close on Banknifty, less than 0.5% on both positive and negative. Nifty closed positive 22,648. It was attempted to go further up after the Q reversal from the previous day's reversal from all-time highs. Banknifty also did the same, but it closed. This is 34.34. It's 165 something. If I am not mistaken, it's 166 points down. So that's how it is. 20 exponential moving average is maintained there. We haven't received logic until confirmed. Here we have a plain small body bullish candle, green candle. Let's sell Nifty. Banknifty seems to be slightly weaker with respect to today's move and the candlestick patterns. Intraday it was like a V-shaped move on Nifty and a small downtrend range bound move on Banknifty. Both finally closing less than 0.5% plus and minus. So already seen that. Support resistance level we already seen. Not repeating that. So if we just try to bucketize different parameters in favor of the bulls and the bears, having the price at very close to all-time highs, of course, in favor of the bulls. Full recovery happens in 6 or 7 days. 5% recovery happens so quick, following the global Qs and then quick recovery. That's positive. Couple of breakout has happened on Banknifty before the close of today and yesterday. Higher high, higher low pattern is still maintained on both the indices. 20 exponential moving average is maintained on both the indices. Momentum was climbed to the blue zones in Banknifty, not in Nifty. So Banknifty is above RSI 60. Trend indicator ADX is in the positive zones in short term on both the indices. Bollinger Bands are expanding slightly on both indices. The beginning of an expansion, which is in bullish bias. So it predicts a potential upside moves ahead as of now. Sectoral indices, different initial sectoral indices, if you see they're red, but they're green except for reality. They're not red. They're actually green. Sorry. So the fact that sectoral indices are intact also can be known from the fact that the momentum, the short-term momentum is sideways, and only the IT sector is in the PS zones. Heavyweight stocks that contribute maximum to the index is also has got ITC and HDFC Bank and TCS green today. Others are red. So momentum there also sideways except for Kodak Bank and Infi. Kodak Bank because of some bad news flow. Infi, overall IT sector is down. So these two sectors only PS zones is all in the sideways. So that way, if you look at it, it's more fitting in the bucket of the bulls. Crude oil has fallen to more than 10% from the top of the trendline channel. It has fallen below the 80. So that way, it's a relief for an oil body company like ours. But remember, there has to be caution because it's still not very far from the top of the trendline channel of the breakout. But as of now, it seems it has fallen back to the 80. So what's in favor of the bears is there is a three candle bearish patterns of reversal towards trendline inner channel right channel low is possible, not confirmed, if the price moves below yesterday's candle tomorrow. RSI also Nifty is still struggling in sideways and trying to climb above the RSI 60, so it's struggling there. But Banknifty has done that, Nifty is struggling there. It's a factor to keep in mind. India VIX is behaving very strangely. 20% of crush fall in the VIX happened for no reason last week, in the last days of April. And then this week you suddenly have a 20% spike up, recovering the complete crash. It's quite strange. In addition, last 2 days it was 5% up and the market has moved up. Today also the market has moved up, Nifty. But we have a spike of 5% for no reason. So that's contrary, which again fits in more with the initial behavior, fits in more in the bucket of the bears. The dollar is spiking up since quite some time. It's at 105.7 and rupee remains weak. Central bank control is 18.5. Weak. Gold is a flat red and 6% of pull has happened, but it's not very far from the all-time highs. Remember, gold spikes up and there comes in a doubt if the money from the equity is getting shifted to the safer level like gold, which is a hedging instrument primarily. Recent highs are showing some kind of red flattish moves after the Fed outcome came that there was no interest rate hike, no change in the interest rates. For that reason, markets does not seem to be very happy. Remember, markets had fallen 68% earlier. Seems like a retest of that happening after the attempt to move up earlier before the event. So the mother market, if the placement extends, we may have trouble. Got to keep in close eyes on that. FIs continue to be selling today, also 1,000 crores of selling in the cash market, and the entire April till now it has been big selling and no real buying that comes in from the FI side. The foreign institutions are not bringing the money into our markets and they're selling off, especially in the cash markets, and they're making money dumping in the derivatives market instead of only. And so domestic institutions have retail money that's keeping and holding the market. That's how things are placed. And if you look at it, it seems like market is still wants to move, but taking a pause after hitting the record highs the other day and having reversed slightly profit booking. And it seems to be taking a pause and then taking it slowly instead of big breakout. There's no real reason for big breakouts after the market have heated up so much. The higher high, higher low pattern still is maintained attacking both indices with the price above the 20 exponential moving average. All demands are showing beginning of expansion with the bullish bias, which is indicating that probably the price will move up. The sharp fallback the other day, profit booking at 50,000 Nifty, sharp moves and sharp reversals, and some kind of resistance at the 2700 zone before the 23,000. In the case of Nifty, is something to be cautious about. But if the price moves below today's candle low, then we may be heading to some troublesome retracement, maybe due before market reaching all-time highs. But even while the trend is still, which the RSI of the Nifty is also not caught up into the bull zones above RSI. So in short, investors has to just to keep on opportunities of buying in SIP mode and long-term quality stocks. I'll try and link some of the option setups, and you can check the playlist for details of that. But for trading, it needs to be directions for option buyers or directional players, but that has not come in. There is an attempt to do that, but it is not confirmed due to the fact that the Nifty is lagging behind slightly with respect to the moment. So in that way, if you look at, if it's trying to come out of that sideways and it not succeeded fully in that. However, the probabilities of the rally extending and then expansion of the upside and directional breakout is having more probability, you can say. But still, you cannot rule out the probability of the exhaustion move, like how it reverses after hitting. Because the dice heated up, values is a little high. and we hardly had any major correction. Even Banknifty corrected only 8.5. Nifty is not gone more than 5%, so it's pretty heated up. There is a probability of an exhaustion that can come. At the same time, there's election euphoria, earnings news flows, and all this can still make market to move further high. But you have to be cautious. Everything you can learn is of that of probabilities. That's what you use the technical analysis. Probabilities on the upside and downside. You never know where the market decides to do that. So, supposition study is all technical analysis, but black swings will take out score things. At the same time, markets can be volatile when all major events like earnings flow, Middle East crisis getting heated up once again, and election posing euphoria, surprise outcomes, and all this can cause jittery market moves. But as of now, market seems to be heading towards making new highs for at least for more time, even while keeping in mind that the market has been running like this for quite some time without major corrections. So play safe and have hedged positions, especially in the derivatives and options, and a portfolio level stop losses always, no matter what, if you're carrying forward the positions all night. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.